Look at the number of CEOs that are selling everything. Look at the CFO of Discover Card just sold all his stock. Look at look at what's his name, Jeff Bezos just sold, I don't know, a lot of stock, $1 billion worth. Look at what's his name, Zuckerberg from Facebook. He's selling a bunch. Why are all of these big time?
Yeah, Jamie Dimon did his first sale only ever. Yeah.
Why are they all selling? What do they know is coming? And so the numbers that we're being told, I believe, are make believe, and they are, I think, putting us into a position where I believe they will come back and revise all of these numbers. They will revise, and they'll end up borrowing more in the second quarter, and everything gets revised, and everyone is acting upon the news of the day. But you look at the way the BRICS are doing things in a very methodical, drawn out, plotted fashion, and that's why I think when things finally do snap, this is why I talk about logarithmic decay.
In a recent segment, Andy Schectman unveils a troubling narrative about the impending economic crisis. Backed by data, he reveals startling figures on inflation, debt levels, and the manipulation of financial indicators. Schectman highlights the staggering increase in shipping costs and warns of supply chain disruptions driving inflation. Moreover, he questions the Federal Reserve's actions, hinting at political motives behind rate cuts amidst soaring debt. What's intriguing is the notable trend of billionaires offloading stocks, indicating foreknowledge of looming challenges. With gold and silver markets exhibiting unprecedented leverage, Schectman emphasizes the fragility of the financial system and the strategic moves of emerging powers like China. As the world grapples with economic uncertainty, Schectman's insights urge caution and a holistic view of global financial dynamics. Stay informed, like, share, and subscribe for more critical analyses and timely updates.
We've raised the debt ceiling, I don't know, like 79 times, and some crazy number like that. And you know, the way that we continue to do this, it is something that obviously isn't lost on the world. But look, when we talk about inflation moving forward, first of all, the Shanghai shipping costs just spiked 400% from 1,000 to 5,000. In other words, to bring goods from China to the United States, now they have to go around the Cape of Good Hope. They're not going through the Suez Canal, and it's a situation where we are witnessing the cost of shipping go way, way higher. Well, go back to 2020 during the pandemic. What was the cause of all the price inflation? It was shipping. It was logistics. It was the supply chain. Supply chain problems are just getting started again. And look, if the Fed cuts rates, which they may do here in the next day or two, it will be blatantly clear to me that the Federal Reserve is maybe the most political Federal Reserve ever. Because look, a nation with 34 trillion in debt, almost 200 trillion in liabilities, 500 billion in trade deficits, and a trillion in interest payments, cutting rates when they're double their target, they're closer to 4% than they are to 2%. This is a problem, and inflation is not going away. In fact, I would argue that inflation will be a very big problem moving forward, and I think that's something people kind of have lost sight of. This is something that, again, all of these things, I think, come back to why you're seeing de-dollarization, why you're seeing all of these things happen around us. There are rallying cries everywhere. And, and just to show the idiocy of the market, the Treasury says, well, we're only going to borrow $760 billion instead of, 55 billion higher than lower than they had expected. And so the market throws a party. I mean, think about how absurd that is. We're only borrowing 760. And, it's below what Wall Street thought. It's below what the street thought. And this is largely due, supposedly, to higher net fiscal flows. That's taxes, right? So they think that there'll be higher the taxes will make up for the loss of or the less amount that they need to borrow or bonds that they need to issue. And my guess is that just like they did with the labor numbers, remember 2023, all we heard about how good the employment numbers were. Well, quietly, hey, by the way, we were 440,000 jobs off, 40%. Sorry, but you don't really hear them yelling from, and you keep hearing all these pundits say, well, the employment numbers are so great and inflation is so great. We're being lied to everywhere. So the lying with the employment numbers, I mean, if you look at the number of CEOs that are selling everything. Look at the CFO of Discover Card just sold all his stock. Look at look at what's his name, Jeff Bezos just sold, I don't know, a lot of stock, $1 billion worth. Look at what's his name, Zuckerberg from Facebook. He's selling a bunch. Why are all of these big time?
Yeah, Jamie Dimon did his first sale only ever. Yeah.
Why are they all selling? What do they know is coming? And so the numbers that we're being told, I believe, are make believe, and they are, I think, putting us into a position where I believe they will come back and revise all of these numbers. They will revise, and they'll end up borrowing more in the second quarter, and everything gets revised, and everyone is acting upon the news of the day. But you look at the way the BRICS are doing things in a very methodical, drawn out, plotted fashion, and that's why I think when things finally do snap, this is why I talk about logarithmic decay. All of these things that we talk about, in and of themselves, they have significance and meaning, but put it together to a bigger whole, to the possibility of countries just seriously tired of the way that the United States conducts itself on the world stage, and the way that we are mismanaging the reserve currency, the way that we are living beyond our means, and how hypocritical the world views us to be. And these are the rallying cries that are bringing all of these countries into the fold. And I just think this is kind of why I continue down this path. Just a couple other things, I guess, worth talking about. Let's see here. Other than really the gold and silver commitment of traders, that's something I really just glance at once in a while. I guess I would just simply say gold right now is at 226% in terms of percentage of ounces versus bars in circulation or backing the contracts. It's 226% of all vaulted gold, 499% of registered gold. In other words, 5 times as many contracts as there are bars in the vault backing those contracts. And when you talk about silver, it's up to 1,642% of all registered silver. Again, it was at about 1,590%. Now it's 1,642. Basically, 1 out of every 17 contracts is backed. The rest is rehypothecated. So this entire system that is over leveraged, whether you're talking the commodity exchanges, and do you think there's any reason why the Chinese bought the LME and are now going to be listing things trading on the Shanghai Exchange and listing and holding actual metals, vaulting them for the LME? You can begin to see how methodical they really are. Little by little by little, they are all over the place. And yes, their economy is in trouble, but they have set up an infrastructure that I believe will be able to weather even the worst economic calamity because they are so resource rich, and they have made deals around the world for the continuation of accumulation of resources, of precious metals, and they're breaking away from the West. So everyone is in trouble right now financially. All of the countries are not in the best position, but in the end, as old Tam Pozar says, the ones who have all the commodities win. He who has the gold makes the rules, and that's kind of it's kind of the direction that I take everything that I take in nowadays, and I try and look at it from a holistic point of view. But whether we're talking across the globe or here at home, where things just keep on getting crazier and crazier and crazier, like at the border, I ask myself, when is that moment? When is that moment when things really become real? And the calm before the storm right now has everyone thinking that the worst is behind us, that we got through it and everything's going to be okay. Yet the way that I look at things, it may be more precarious than it's ever been on every front.
Thanks for tuning in to today's insightful analysis. We've covered crucial points regarding the looming economic crisis, shedding light on factors like the staggering increase in shipping costs, the Federal Reserve's potential political maneuvers, and the concerning discrepancies in financial indicators. Andy Schectman's holistic perspective offers valuable insights into the complex dynamics shaping our global economy. As we navigate these uncertain times, it's crucial to stay informed and engaged. If you found this content valuable, Don't forget to subscribe to our channel for more thought-provoking discussions. Remember to hit the like button if you appreciated today's insights, and feel free to share your thoughts in the comments below.